All right. Welcome, you guys. Hope everybody can hear me. I know it's a little bit different. This is a Saturday. We're doing a live stream just to get you guys ready for this upcoming week of earnings. We got some big names coming up, and we want to get some foundation laid so that when it does show up and when we finally do see those earnings, we at least have an idea of what to expect. So, whether you guys are watching now, during the live stream, or if you guys are watching later on during the day, if you're here, give me a comment stacks in the chat box, and we will get right into it. One of the things I want to share, if you are in our Stacks Discord, let's go ahead and share that real quick. If you're in our Stacks software, let me move my face so you can see it better. In our main chat, right now we do just have max TG trades down on the bottom, but over time, later today, we're going to enable my channel as well, so you guys will be able to see all of these posts that I'm sharing with you guys right now. Been doing a lot of earnings analysis, looking through stacks, looking through our charts, get an idea of what to expect for the upcoming week. So with that being said, let's get into it. Max will be joining us very, very soon, so stay tuned for him. I'm just going to start off with what's in my channel because I just posted all of it, and let's just go through that to make things a little bit easier. Okay. So for example, if you're in Stacks or if you're in our Discord, you will have access to all of this. But I've just been going through all the earnings that are going to come up over this course of the week to give you guys a preview as well. Here we've got Verizon, Domino's Pizza, we've got Lockheed Martin, Coca-Cola, GM, Northrop Grumman. We've got Enphase, Texas Instruments, EQT. By the way, if I'm overlooking any of these and you're in the live stream or if you're in our chat, go ahead and let me know if there's anything in particular you want me to go over, whether it is, something you've noticed in our flow, something you've noticed on Twitter, or even just on the charts. You want me to go over those as well. But I'm going to pick out the ones that are either bigger names or bigger market caps that I know I've seen some sort of flow, or I at least want to get some idea on what's going on. But there's so many. If I were to do this would take hours upon hours. So we're just trying to get through the big ones, the important ones, where maybe we have a little bit more liquidity and we've got better chances with our, with our options chain. On Wednesday, we've got AT&T. We've got Tesla, Google or Alphabet. We've got IBM, Chipotle, QS, which is QuantumScape. Probably peek over at Alaska Airlines as well. American Airlines for Thursday. Southwest. Take a look at Dow and NASDAQ probably as well. Keurig, Dr. Pepper may be an interesting one too, especially with Coca-Cola on Tuesday. At close, we've got Intel. We've got I think that's pretty much it. If there's anything on this page you guys want us to go over, please let me know. Let me make sure you guys see the full thing. All right, make sure you guys let me know if there's anything I skipped on this list that you want to take a look at, especially if you happen to have stacks and you've already seen certain flow come in on it. We definitely want to take a peek over at it. All right. Okay. Back into my Discord. Keep in mind this will be shared to all the users over in Stacks. So if you're on the Stacks Discord, you can take a peek over at this. I've also shared it in the main chat, or at least certain ones. What's going on, Max? Good to have you.
What's up? What is
good to see your beautiful face.
Of
Hope you had a good
course.
week. Max Max and I have both been doing quite a few live streams, so I hope you guys have been able to catch on. Max does more of the day to day, full live stream. He'll usually start in the morning, Monday through Friday, depending on how the flow looks. He might dip out here and there, depend if it's a slow type of day. But overall, you could probably expect to see him if you are in Discord, if you are on Stacks under TG Trades. You'll be able to see him post those live stream links so you guys can get in on there. Just so you guys also know, like I was saying, you'll be able to get access to my channel, eRoo Trades, very soon. We will enable that later today as soon as our developer can get to it. But you will have the access to those two, which are going to give you guys much more, much more confluence, a lot more analysis, and also, of course, our live streams. I know it's Saturday. It's a new thing. We haven't done too many any Saturday live streams at this point, but I know we've got a big week for earnings coming up. Just so Max is caught up, we just went over what's coming up in terms of this week, showed them the earnings picture, but we will discuss if there's anything important to look over. If there's anything that you guys want us to go over, make sure in the chat box on YouTube, go ahead and let us know. But I'm just going to go over these real quick, the ones that I posted, and then Max also has his Substack and his channel where he's going to post a couple things. So I'm going to ask him to add on to what my analysis says so far. Keep in mind, too, this is a Saturday. It is market close. The ones, aside from probably Monday, the Monday before open ones, keep an eye out for stacks. Keep an eye out for news because there's still going to be additional things that show up throughout the week. So, for example, if something's reporting on Tuesday or Wednesday, it's very important to see what the flow says on Monday or the right before close if it's something reporting after close or the morning after. But Verizon earnings, like I said, not much flow recently. Just a put for $42 by October. One call for same as well. Call for 45. They report Monday, but keep an eye out for any stack sprints that might show up. So just the last two. Again, we haven't seen anything leading up to it. These are all the buys that I'm showing you guys here. These are all still active, as you may understand. So you can kind of peek over at the spot price that's over on the right. Take a look as to see, as of right now, at least on the 17th, spot price was trading at about 41, right under $41. See if it's gone up or down from there. See if these people might be profitable at that point. But Verizon, let's see what Max has to say on his channel. He just posted this too. Earnings preview. I'm going to let you go ahead and read off what you have to say.
Yeah, so basically, let me go ahead and pull that article. So EPS, they're expecting $1.18. That's a 2.6% year over year gain. Revenue, we're looking at 33.58 billion, which has given us a 2.4% year over year gain as well. In terms of EPS, we're looking at 0.18%, which is hinting at a potential beat here. So that is one thing to always look at as well is their earnings or ESP in this case. Usually if that's positive, that means the street is expecting a beat. Now, however, with 0.18%, that's like expecting a pretty small beat. So it might not be a thing where it swings 10 to 15% in a direction. It might just chop the living hell out of both sides of those contracts, which, to be honest, Verizon is one of those companies where unless they are announcing a partnership or anything like that, it moves kind of funky. It's never going to be consistent or true to that, but key themes that we have driving the quarter for them: broadband, which is their bright spot. They added 339,000 net broadband subscribers last quarter, which I got suckered into that. I had Verizon phone service and they're like, "Hey, you want internet for $30 a month?" And I was like, "Sure." Mine's crazy expensive, so Love a good deal. We have fixed wireless catching fire in underserved markets. So fixed wireless just means like you pay 35 bucks a month, you get a set amount of data, a set amount of like other benefits, and it's not like fluctuating based on the data you do use. However, wireless is losing steam in Q1. Verizon lost 289,000 mobile subscribers due to no aggressive promos and T-Mobile and AT&T poaching customers. Also, the U.S. one thing to keep in mind: U.S. mobile market is currently saturated. So a lot of these companies are going to be playing defense. Pricing power is going to be into focus as well. Verizon hiked prices on several plans earlier this year. That's helping revenue inch up, but will it offset subscriber losses and are consumers bulking at higher bills now and considering making a move? And then quietly profitable. Despite the low growth narrative, they're a cash cow. 29 billion in operating profit, 18 billion in net income, and they have a market cap currently of 173 billion as well. However, the big appeal of Verizon, and this is maybe something you guys should check into, is they have a great dividend payout. So that is a big reason why people are in there. So that's one thing to keep aware of as well. But yeah, those are kind of the big things. It's not going to be a flashy one, but it's a quiet, like consistent cash machine for people. So you'll see whales randomly jump into it and the price just go parabolic. And because I like this earnings because the expectations are so low. If they do well or they do poorly, you can catch a pretty nice gain in either direction, if we're being honest.
Yeah, very, very good. If you guys are taking a look over here on my trading view, just for you guys that are in the Discord, if you want to understand, these blue lines that I'm putting onto my chart are basically the big resistance and support areas that you can expect price to move to, depending on what direction it does go. In terms of charts and in terms of things leading up to earnings, the fact that it's dropped like this before earnings kind of gives me a feeling that we might see it to the upside. Especially because we do, overall, when you take a look at Verizon and look at the earnings on the bottom, they tend to be more so beats than misses. Every now and then you'll see a miss here and there. But I also want you to understand too, just because it's an earnings beat does not necessarily mean price is going to go up. A lot of stuff is priced in. So the thing that you want to keep in mind as we do these earnings reports, as we do these reviews before the report comes out, everything Max said has technically already been somewhat priced in. You have to keep that in mind. Now, what we have to understand is stacks will give us a little bit of insight as to what big money may be expecting and also whether or not they've been purchasing. So if I go into our stacks really quickly, just under Verizon, like I said, on the left side, buys and sells. There's nothing extremely recent. We have a sell for calls and a buy of puts and another sell of calls. So it's a little bit more bearish in the last couple days before we closed off for the weekend. And on the right side with equities, you'll see they haven't necessarily been loading the boat that much. They've been purchasing here and there, you know, millions and millions of dollars, but that's just what happens with the institutions and the whales there. Now, if we are expecting a beat, right? If we are expecting a beat, the fact that prices dropped here means that there is more of a possibility we might see an upward trend after earnings comes out because they've already sold off. They're trying to load up the boat possibly, just like the other way as well. If it was shooting up quite quickly, we see new all-time highs, etc. Yes, playing the lead up to earnings would probably be a safer bet, but at the end of the day, the risk would be to the downside if we see a huge run up right before earnings. Couple things I really love about this one though, the PE ratio. I've always talked about this if you guys go through our previous live streams as well. The PE ratio is under 10 right now, which is a very, very good value in terms of something as big as Verizon. So that's something to keep in mind. And another thing as well is the institutions understand that that's a good value play. If they're continuing to make money, which they do, they have great dividend. their margin, net margins, what, 14% last quarter, 14% the quarter before, so they're pretty steady. Ultimately, I would say Stacks doesn't give us a huge amount of up or down in terms of bearish or bullish, but I would say if I were to play Verizon here, I would probably play to the upside. However, there is always the possibility it's going to have a slight beat and price might just chop around in this area that we see right now. But it does need to break up above that 4170 range for it to have more clear skies for the upward trend there. Also, too, you can also understand here, we're looking at the big picture of it. These are all-time highs for Verizon. So do we see it head further up? There's a very good possibility that in due time we will. So in terms of an equity play, might want to aim for, getting in with those low PE ratios so you can play it to the upside there. All right, next one. This one will be pretty quick. Domino's Pizza. I was peeking over at Stacks, and there's really nothing going on with it on Stacks. The buys, the sells, there's absolutely nothing that Stacks has picked up. Keep in mind, we have our filters that show us what's important to take a look at. There are other flow softwares out there that are just going to give you all the raw data, but a lot of that can be very noisy. So Stacks has nothing to necessarily say. On my chart, kind of doing the same thing as what you saw with Verizon, kind of chopping around in a range. It is at a support area so that, if they do see a solid beat, we could see it head up further. But not much to say about Domino's. I'm going to stay away from this one just because I don't necessarily see any news or any sort of information that's really going to help me trade this and give me some sort of edge for that. Let's see.
Yeah, nothing with Domino's, by the way. Like from a news standpoint, it's pretty much like store openings, store closings, international market exposure as well is always a emphasis for them. Because at the end of the day, they're like consumer driven, but they're also like how many locations do we currently have operating driven, and how many are we having to shut down? They probably will get hit with tariffs just because of like imports for their ingredients, unless they are going local. So that's another thing to look out for, as well as any potential partnerships, whether that be brand deals or whatever the case is. So just a couple things to look out on that front.
Yeah, one of the big run-ups that we saw for Domino's was during COVID too. A lot of people at home ordering in, getting pizzas delivered. Saw a huge run-up back in 2021. But it's kind of just, it's in a little range right now, so it's hard to tell exactly where it's going. I'm staying away from that one for this earnings. Next one, Lockheed Martin. Lockheed Martin, when you take a look over at Stacks, just overall, there's not too much activity going on, but the two most recent ones are two buys. Down for September 19th, 2025. Strikes of 470, 475, and they dropped a little over $500,000 on each of those, so that's something to consider. Keep in mind those are some pretty expensive premiums. They spent over $2,000 on each of those contracts. The spot price being at $473 when they did get in, and it's dropped since then. So the chart here I'm showing you guys, it's dropped since they've entered from earlier in the week. However, the thing with Lockheed Martin, it is a defense contractor. Definitely, we have to understand the global tensions and things like that. That's where they're going to be making a bit of their money. But a bit of it already has been priced in, and right now, that news is fairly quiet. So if we see an uptick in terms of that news, we'll probably see more buying of this. In terms of the earnings too, though, they tend to do fairly well on their earnings. But at the end of the day, I would say that Stacks shows a little bit more of a bullish sentiment to it. But for me in particular, those contracts are a little bit out of my pricing range, what I'm comfortable with. I don't like to enter those where there's that much of a risk. But I would not be surprised to see this one go up. So
Yeah, that's fair. I mean, we are probably going to end up in a war at some point, so
yeah, that,
like
that's not nothing new for America.
exactly.
Next big one, Coca-Cola. Big thing to remember about Coca-Cola is that we did just see Pepsi earnings earlier this week. Pepsi did pop because of their earnings. Coca-Cola, Tuesday before open, mostly sells this past month. We see a call purchase here on the 2nd, so at the beginning of this month for 2026, January 2026. The only thing that I don't love about that one is that it's only 96K, which is fairly small. Uh, Prices stayed fairly flat since then, but all the rest have been sells at the $75, $70 strike, selling of those calls. So that's indeterminate. What I would say is Coca-Cola does report Tuesday before open. Those of you that have stacks, keep your eyes peeled. There's a very good possibility that we'll see, some buying of calls or puts, and what you're going to be looking for is that blue bar, the unusual situations. The blue bars, especially if we see them for the strikes of August 1st, August 15th, those are the two closest expiration dates. And especially if they spend premiums, I would say upwards of 200, 300K would probably be the range where you would want to take a little bit more interest in. So we'll keep an eye out for that. In terms of the chart, we're kind of in this flag pattern. Coca-Cola is a good company. They do well overall. They generally do well with their earnings. But again, like I said, earnings can be either up or down, even if it's a beat on their earnings revenue and per share. So there's a big gap down below. I don't think we're necessarily going to see that unless we see bad forward guidance or retracted forward guidance. But at the end of the day, I think we're very likely going to stay around in this area. If we do peak up to one of these other levels, I don't see this shooting off in any certain direction. What do you have to say
Yeah,
about it, Max? Yeah.
so I did a breakdown. Zach's rank gave it a number 2, which is a buy. ESP is expected at a negative 0.46%. All you need to know about that, it's not bullish whatsoever. Operating margin is projected to be down 10 basis points. Revenues expected between 12.5 to 12.6 billion, which is up only 1.9%. EPS we're expecting 83 to 84 cents, down 1.2% from year over year. Now, what's moving the needle here? Price power is still reigning supreme. They leaned heavily on pricing / mix strength. 5.8% boost expected. Premium product strategy plus inflation pass-throughs equals margin armor pretty much. However, volumes are declining in their core markets, which are North America and Mexico. And that's just more representative of consumer fatigue in general, not just specifically for Coca-Cola, but it's showing like even iconic brands can't keep up or keep people interested or motivated to keep buying in a sense. Global headwinds are also brewing. Currency is expected to knock 3 to 5% off revenue and EPS. China's low confidence is the main reason for that. Eurasia and Latin America are facing inflation pain, and U.S. logistics bottlenecks also threaten their margins as well. Basically, their international exposure isn't all upside for this incoming quarter. So that's something you'll want to look at to see if it's been priced in yet or not. Because again, those are those numbers that will come out during earnings versus something that they can give a definitive stance on so the market can react to. Digital and innovation, silent wins here. E-com channel growth is doubling in many countries right now. New marketing tech plus pilot programs targeting Gen Z consumption patterns. And they also have brand diversity, which gives them different options. So like Coke isn't the only thing they make. So like they don't have to only rely on soda at the end of the day. Management has been investing smart, but results may take longer to show in numbers. So very much like tech, when someone releases a new product or a new strategy or a new product in this case, in Coca-Cola's case, a new product would be a new strategy or new marketing techniques that they're bringing into play. Typically, like a new product for NVIDIA, we won't really see the results of this for about 12 to 18 months realistically. Their valuation check, people think it could be too bubbly. Their forward PE is 22.7, but the industry average is only 17.9. But they are just over the S&P average, which is 22.59. It trades at a premium uh, uh, compared to its competitors, in this case, Pepsi, Keurig, and Monster. Um, Expectations are already priced in. That is one thing for Coca-Cola. Every earnings, it will be priced in for the most part. So usually the moves are a little more muted unless we're going to see some more downside. To the upside, though, uh, it sounds like a lot of the positives for it have already been priced in at this point. So we're not going to see an aggressive or crazy bullish pop unless they have a ace in the sleeve at this point.
Yeah, very good. Another thing to consider too, because of Pepsi, this is Pepsi that reported earlier last week. Pepsi had a double beat, had good forward guidance. You saw the pop over here. So if you go take a look over at Coca-Cola, they had the same reaction in terms of a pop the next day, but it's really sold off quite a bit in terms of that pop from there. So again, like Max said, a lot of it's probably priced in already. Something to also consider is if you take a look at the big picture of Coca-Cola, this used to be one of Warren Buffett's biggest holdings. You know, they're just in this giant uptrend since 2008, 2006. So, and overall, you can see it's just upwards from all the way back in 1960, 62. It's just been headed up. So, company does really well. People always buying their soft drinks. Company is well run. But at the end of the day, we need to understand too. Oh, here, by the way, I added on a logarithmic chart. But understand that down the line, it is a great company because of also their dividend yield. They do pay a dividend. It's always been fairly consistent. At the end of the day, it is one of those safer companies to purchase for the long run, but it is somewhat of a slow mover. So it's one of those ones that you probably want to put into your retirement portfolio type of stocks. Oh, let's do that. Okay. What else? Next.
All right, that's done. I just finished EQT's preview.
Awesome. EQT. I do have a few selected ones so far. Obviously, I did get through Wednesdays, and then on Wednesday we can get ready with additional closing bell things as well. The next one, NOC, Northrop Grumman. Not much in terms of stacks flow. You can take a look over at the dates that are posted there back in April and January, and two sells, so that's not much to consider in terms of, well, you know, understand what direction they might be going in. The chart itself is approaching and close to its all-time highs. Company does fairly well overall. I would say the risk right now is more so to the downside, but I don't have too much additional information with stacks to say much else about it. PE ratio at about a 20. It's pretty solid. They're also another aerospace and defense company. So again, just kind of like LMT, Lockheed Martin, kind of sits in that similar space for you guys to consider there. Got anything for that, Max? Should I go to the next one?
No, you can go to the next one. Some of these, I'll be honest, a lot of these we won't get news for or kind of like insights for until the day before. Other than that, you'll just kind of find the Zacks article that just gives you basically like the historical data and but no real catalysts of like what to look out for necessarily. Whereas with like GM, there's some
Yeah.
actual like catalysts that have been building for a while that we're going to see the results of for so nothing for those guys right now.
All right. By the way, if you guys are still in here, I know we've been streaming for about half an hour. If you're still in here listening up, give me a comment in the chat. That way we know that we're not just shouting out into the void. Give me a comment, Stacks or ICC. Let us know you're here. And also, if there's anything in terms of these that you're going to get into, or any of these that you want us to review for you today, make sure that you leave that comment, leave that ticker in the chat box so that we can get to it today. Next one, GM, Tuesday before open. The recent flow has all just been puts through April, May, June, and July. All we see for the buys are these puts, all aiming for September and January. So, you know, just keep that in mind that that's what the flow says so far. Now, if on Monday we see a whole influx of buys for calls, definitely that would flip our sentiment with it there. On the chart itself, I would say there's kind of a little bit of a bull flag forming on the daily on a small situation, but we do have a pretty overextended stochastic on the bottom. Here, let me pull this on TradingView for you guys so you see a little bit better. Overall, what I'm saying is down here, if you take a look here, we have on the daily, we're fairly overextended on our stochastic. Okay, so that means that there is a risk that this can come back down, head back to the downside. PE ratio though here, 7.66. You know, more of a value buy for the long run if you are considering it that way. But if I'm to go back, let's see what Max has to say in his Discord channel.
For EQT?
No, for GM.
Oh yeah, here I can pull that up. So for GM, they're an interesting case to be honest, because they roll back and pull forward their EV initiatives almost every earnings report. They either are going all balls in or are gonna now scale back aggressively, which is always a funny thing to see. But their EPS we're expecting 244 to 245, which is down 20% year over year. Revenue is at 45.34 billion, which sounds great, but that's also down 5.5% year over year. EPS trend revised up 10 cents in 30 days. But now our ESP we're expecting down 4.05%. Again, that is not bullish. The setup is mixed. Beats are common, 4 straight quarters, but no ESP edge. So it's a neutral tone from the models here. Now, what's driving the quarter? We have EV growth. GM's Q2 US EV sales jumped 111% year over year to 46,000 units. That's momentum, but still just 6% of their overall vehicle sales. China could be making a comeback. They delivered 447,000 vehicles in China, which is up 20% year over year as well. NEV, new energy vehicle sales are also up 50%. The Wuling Mini EV is still the top dog. China's back and GM is leaning hard into affordable EVs there. But the macro is painting a tougher picture. North American wholesale volumes are estimated to be down 8% year over year. GM North America revenue is estimated at 37.86 billion, which is down 7%, and GM North America's operating income is estimated to be down 17.6% year over year. Global wholesale volumes are estimated to be down from 1.04 million to 949K, which isn't a great sign with wholesale, because that means the amount of vehicles that they're producing for wholesale is taking a hit, which means their bottom line is going to take a hit. Even with strong brand sales, total volume and revs are still trending down across these key segments. AI plus efficiency are the long-term tailwinds for them, however. They're going full throttle on AI, predictive maintenance plus visual inspections, real-time consumer behavior analysis, assembly line rebalancing at scale. They're not just making cars, they're building smarter factories. That might not move the stock on Monday or Tuesday, but it's GM's longer-term story, which has some legs to it. So the final word with them is they're in transition from legacy auto giant to EV forward AI powered global manufacturing beast. But in the short term, it's still fighting gravity. This quarter could show signs of that pivot gaining speed or more pain from slowing volumes. Traders are watching margins, AI execution, and delivery growth like hawks. And if GM misses or guides soft, expect a sharp pullback.
That's very fair. I like that. The thing that kind of sticks out to me is that they're 20% down 20% year over year for their EPS. But
Yep.
like Max said, they're aiming for the long run. They're trying to figure something out for their future. So if they have good guidance for the future and are able to get that double beat, we could probably see it pull up a little bit from that little bull flag that's formed. But like you said, if it misses, that's probably going to head down. Keep an eye out for what Stacks has to say over the course of or basically on Monday, because they do report on Tuesday. See if anything comes in for it. But so far, the tape on Stacks shows a little bit more bearishness than bullish. All right. Next one. I like this one. This is one of the ones one of my picks for this week. ENPH, Enphase. If you take a look over at Stacks, what we see right now is quite bullish. The last few days, on the 15th, earlier this week, we saw a bunch of big money calls, all for January of 2026. The $45 strike, and we also had some that weren't big money, but still 691K and 477K. They are buying lots and lots of those contracts here. OI is extremely high at this point, but this is very likely playing for the long run in terms of this company. Enphase is a electric company. They do semiconductors, so you can imagine in the semiconductor space, along with NVIDIA, AMD, ARM, and all those other ones, ASML. So understand there's definitely some bullishness when it comes down to that sector, just due to the love of AI and the necessities for all of their hardware and all of their developments. Now, the thing about it is, though, their chart has shown quite a bit of sell-off. So from their highs back at the end of 2023, or sorry, end of 2022, they've had this big sell-off, this big drawdown, down to about 33 is where I would say that lower range is. Most of their earnings have all been pretty positive up till that point. Back in 2024 is when we started to see some major misses, and we had a bit of a distribution pattern where it headed down from there. Now, the things that I want to point out here, let me make sure you guys can see that. Let me pull up the chart itself. The main thing that I want to show you guys here is the volume that started to come in near these lower ends. We see some pretty big volume spikes down below, and when you consider it compared to, beforehand, you don't see these types of volume spikes all the time, and especially when they are near the lower end, it does show that we possibly have some big money taking some positions in these stocks here. The hard part about this is we haven't seen a quick automatic reaction is what we're kind of looking for. So let me copy this in here for us.
By the way, I'm doing the breakdown for Enphase right now, so
Perfect.
Sorry if I've been silent.
No, that's fine. I got this handled for while you do that. Those of you that are familiar with my style and familiar with what I'm looking for, Wyckoff and Wyckoff accumulation, distribution, these are patterns within our charts that we want to be, very looking out for. The idea here is that big money is going to do their thing and try to accumulate silently while news is bad and while people aren't looking at a stock. A lot of people are probably mad at the fact that overall the stock is sold off over the years and sold off after a big giant pop up higher. So another one is, you guys that are familiar with it as well, this is a very standard Wyckoff cycle, or not just Wyckoff cycle, it's called the market psychology cycle, where you see a huge run up to all-time highs and then a giant sell-off to what we consider despair and a depression side of the stock. That's actually where you want, when everybody is greedy, you got to be fearful. When everybody's fearful, that's where you want to start to be greedy. And another thing as well here is that we do see a little bit of bullish divergence when it comes down to these lower ends, and we're very likely starting to see what we consider a selling climax at the bottom of this end phase energy. Now, we don't know just yet. That's the thing I want to make sure that we're aware of. When it comes down to these Wyckoff patterns, we are technically looking for what we consider this AR right here, an automatic reaction. I'm saying that there is a possibility we could still see further sell-off and a bigger volume spike for a more guaranteed type of selling climax. But for where it's at right now, if they do show some very positive earnings, a double beat, some forward guidance, we do have a lot of our indicators showing that it is near the oversold side of things. So we are looking for an automatic reaction. It doesn't have to necessarily pop this high. I would say toward the $60 range is probably a safer bet, or even could only go up toward 50. But I would say if we do see a good beat from end phase, we could see a pretty solid, good looking pop from there. Now keep in mind though, with Wyckoff, that's just the very beginning of the phases. It would definitely take some time. I would say probably in 2027 and on, we could see this take a cup and handle look and head back up toward, toward the $80 to $90 range, if anything. But that'll take some time for it. But in terms of stocks that are beat down, that have more upside potential than downside potential, especially with this earnings this time, I would probably be saying look for the upside. Now that also has to do with the fact, if I'm just looking at this chart, I wouldn't necessarily give you that type of analysis. A lot of it has to do with the fact that when you take a look at what came in just this week with end phase, we see a lot of buying for 2026. So they're getting ready for, I would say, probably that automatic reaction toward the upside. Okay. So that's one of my picks for this upcoming week so far. I've shared that with those in our Discord. But if you're lucky enough to have gotten through this and find this in our live stream on our YouTube channel, if you're back here after they've returned and reported earnings, I'd love to know, hey, was I correct on this call out, especially with stacks on our side. You ready for that yet, Max? You're still working on it. Oh, you're on mute.
Yeah, I just finished it. I'll post it after I kind of run through it real quick. But our snapshot here, EPS, we're expecting 62%, which is up 40% year over year. Revenue, we're expecting 356 million, 17% gain year over year. Earnings ESP is down 4.24%. So again, not bullish. Zacks rating gave it a number 3, which is a hold for them. We also have EPS trends revised up 7% in 30 days. So that sometime is a good case when it comes to a bounce back coming from a stock that has been, quite frankly, just losing money. The first article that came up when I looked into end phase is, where is it? Investors' 3-year losses continue as end phase energy dips a further 5.4% this week. Earnings continue to decline. So probably not the greatest Yahoo Finance headline you want to see when when Googling this, but hey, it is what it is. So what's driving the setup here is a couple things. So first things first, revenue is climbing, but sentiment is still cooked. ENPH has seen revenue growth year over year, but analysts are still cutting targets. Morgan profit take went from $64 to $37, BMO $46 to $39. Guggenheim, they gave it a sell rating and a $33 profit take. 13 sells, 13 holds, and 9 buys. That is about as split of a tape as you're going to get when it comes to sentiment from the big boys. Investors want proof of execution. I think the time for hearsay is over, and that execution from them specifically just has not happened in their eyes. Now, price carnage is another thing. It's down 25% in the last 90 days. The stock cratered from over $130 last year to, well, now $39. Even with earnings growth, expectations are absolutely shattered. Chart wise, one more miss could break that critical support at $34 as well. For our macro and market signals we're looking at, solar margins are under pressure from oversupply and pricing competition. U.S. renewables incentives are still strong, but demand is pacing slower than expected. Europe is seeing a rebound, but ENPH's exposure is mostly in the United States. So that's really going to be the only thing they see. Analysts see 96% profit growth ahead, but this quarter specifically may not be the one to spark the turn yet. We also have some insider buying. The CEO is starting to step in. The CEO bought 4,000 shares at $46.35 a share back in April, and now he owns 1.6 million shares of the company. This could be a bullish tell or a falling knife catch as well. For our valuation check, we're looking at a PE ratio of around 36.75x. It's well below solar peers' peak valuations. Market cap's at 5.2 billion, down from the 30 billion at its peak. Our bull case, revenue growth is intact, EPS revised up, insider confidence, aka buying in April. Analyst models show 2026 inflection, and solar sector sentiment can always turn around fast, as we've seen with other FSLR, Sunrun. Think of names like that, and some of the gains that we've seen not only in Investor Central Club, but you'll just see on Twitter. Now, the bear case is it's an ugly chart. There's no real technical strength to it right now. The earnings ESP is negative. It missed 3 of its last 4 earnings as well. It has a macro risk plus oversupply pressures, and price targets are just falling. Instead of seeing increases with these, which is what we'd want to see on a bounce back, we're seeing all the big guys potentially look to cut their losses here sooner than later. Now, they have elite tech, but growth margins and investors trust all took hits. If they beat and guide stronger, we could see a vicious bounce here. But another miss, this thing could unplug completely. Eyes are going to be on post-earnings commentary, margin expansion, and install partner data as well. So, yeah, let us know what you guys think about this. Is it long and ready for liftoff? Are you a post-earnings buyer? Are we going to short the slump? Or are we avoiding solar until further notice and we get a little more clarity instead of these vicious swings in opposite directions, to just put it frankly, because there's no other way to really say what's going on with it.
Very good. I like that. That's a lot of information there, guys. 2 things that are bullish. Number 1, Stacks is showing a lot of those buys for 2026. Could they be early? Very, very, very possible. Buys from the president and CEO. He got in at $46. It's already dropped back down toward 33. It could be, could he be ready and readying himself for the future? Very possible. But like Max said, if they have, poor earnings, if they don't have good guidance coming forward, could this see a further drop before it gets bought up? I agree with that. There is a possibility. There is risk to the downside still. Just because it's been, I wouldn't necessarily say a huge capitulation drop. There still might be a little bit more to come. But in terms of the earnings gamble that people love to look at, people love to play, If they are able to give that upward forward guidance, and we continue to, here's another thing is, if Stacks continues to print out uh, those calls this upcoming week on Monday, and double check when they report on Tuesday, right? Yeah, they report
Yeah.
after on Tuesday. So if Monday and Tuesday you still see additional calls coming in, that's probably your sign that this is expecting a pop back up. But again, earnings, we always tell you guys, be careful with earnings. It's always going to be somewhat of a gamble. But what we're trying to do here is we're trying to give you guys the data, the information, what Stacks says, what the charts kind of show us, to get us ready for potential pops and potential profits to be taken. So keep that in mind.
I will say with solar, the one thing you will see are a lot of insider moves. So like I would say even just looking at stacks right now and filtering from the 14th to the 18th last week, very small sample size, right? But when I look at this, all it's telling me, so like I'll give you an example, Coinbase, right? That thing dropped. Like when Stacks alerted me for those $400 calls on Friday, it was when coin was at 378. And I was like, okay, these are due next week. That's kind of risky. And we saw what happened with that. That it alerted it at like a $3 entry, so like $305 a contract. And if you would have held them a week out, those would have went. They peaked at like 48.50 a contract. So you would have had a nice $4,500 gain on a 7-day swing. And if you look at that kind of like call block that came in for those $400 calls, and 380s, I think, were the other ones spread out. ENPH has a very similar pattern, except it's only for the $45 calls, which is a good sign for it. And another thing that you can do is look at the timestamps. So we can see that someone bought in a golden sweep at the 41.51 spot on the 15th. And all of these came in on the 15th, mind you. So we have 1.28 million dropped on $45 calls, 2,000 contracts at the 40.51 spot. Mind you, it's a 640 average. Then our next order we would be looking at is at 131 on another bounce. They bought in at 645 for even a higher premium. Then we see at 250 a 1.12 million at 605 because it was at $40, so it had lost 66 cents. And then we saw some more hedging because at 234 we saw 39.97, another 691k deployed, and at 301 40.24 we see another 477k deployed. Now, granted, these are all automatic executions, so the way I would read this is was probably a multi-leg order with orders that were placed at certain price targets, and those price targets executed, and that's why we're getting that automatic execution tag within it. So that's how I read these options plays, by the way. So when you guys see me post like an order block, these are the things that everything I kind of just divulged to you in 2 minutes. That is how I read order flow from market open to market close 8 hours a day. So those are kind of the things you're going to be looking for. And with ENPH, this is very similar to Sunrun and what we've seen with that as well. And the other thing is the expiration dates on these. So clearly we're expecting a long-term bounce here, but again, this has a great setup in terms of being a potential 500%, 600% type of situation, just based on the buying pattern of the last, and that's just looking at the last week, mind you.
Yeah. Yeah, I mean, they're aiming for 45, which just let's see in here.
And mind you, 45 by start of next year. So
yeah,
that's another thing to kind of keep in mind as well. I would also, this would be one of those ones where I would look at like, what are they, did we see any big sells for the $45 as well?
yeah.
For a similar time range.
45 would be up 13% from where we're at right now. So I mean, again, gamble could go either way. You got to understand the company itself is doing its best to try to make sure that they boost their own stock price, right? And the president CEO's gotten in, and Stacks shows a lot of these orders in which somebody is expecting upside in due time. Now keep in mind that is in January, so that's all the way out here. So this realistically, there is a possibility where we'll see it drop a little bit further and then come back up before that date, right, in January. So that's the other side of it, is they can still make their money. Their break even point would be at about $51 if it's able to get above that. But they're playing that longer term type of thing, so there is that possibility there, guys. Okay.
I will say, if you want to protect yourself during earnings, it's always good to look at sells. So you could look at people selling puts as what they're thinking is support. And then you can look at selling calls as what they're looking at as the psychological resistance, because that's where they would plan to take profit, essentially. So that is one way you can always look at. If you see on Stacks people selling stuff, just think of support and resistance. And that'll kind of give you an idea of like, okay, I see a bunch of people starting to sell puts. Typically, you're going to see a bounce at that point, because that means you're seeing people start to take profit on their put positions. So if you start to see and that's one thing to look at during flow as well. I wouldn't say look at it the whole time, but maybe like every hour, just check in to see if any big money orders have come in or unusual sell orders have come in, because that can typically give you some insight into are people taking profit? Are people building positions? What's kind of going on here?
Yep, very good. All right. Next, we've got Texas Instruments earnings coming up. Max,
Dude,
Max,
oh my
yeah,
God.
you can go ahead, tell them your position
So,
with Texas Instruments.
So Texas Instruments, we got into, which this is like my favorite thing, because everyone I post in a hedge fund forum where I do like breakdown analysis for it, and this guy came on and basically gave a bearish case to Texas Instruments, and 5 minutes later I had posted a breakdown because we saw a big order back in, oh no, those expired, so those are done. But we saw a big order back in June, no, at the end of May, for 210 calls, I believe. And they were only $1.68 per contract. Now, mind you, Texas Instruments has been ripping since the end of May. And with the moves they've been making, I think they're going to I think they're going to be probably one of the stronger earnings reports, because they're benefiting from all this semiconductor and AI benefit, and they're like riding the tailwinds of that. And to give you perspective, those calls closed this week, and I didn't close them out, but they closed at 575%. So from $1.68, I think at the peak they were 725%. They were trading at like 1.1K per contract. So yeah, they had a solid gain, but I think they are about to crush some serious butt for this earnings, because again, that semiconductor AI space right now is hot, and Texas Instruments is kind of like the nerdy girl with braces who got hot when she got into her 30s finally. So it's definitely not a sexy company, but it's in earnings. Honestly, the boring companies are the ones who typically deliver the most consistent and safest results in terms of getting a return on whatever your bias may be. Because all you need to do, guys, is read a news article, honestly, or read what are the expectations. Because 9 times out of 10, with companies like Texas Instruments, you're seeing all of their stuff already get priced in to a degree. So there isn't going to be an aggressive 10% swing. And these positions you're going to see being built are going to be longer out. So even if you get that initial earnings drop, you're most likely getting that recovery over the next couple months as things move forward as well.
Okay. I like that. Stacks is showing kind of all over the place. A lot of the. I would actually say there's probably quite a few, like you said, that just expired too. The most recent is a put that was purchased, and that one's the short term one for next week, next Friday.
Yeah.
$212 strike. But that's a fairly small move down, if anything. From 217, it closed at 216.62 on Friday. So there is a possibility maybe this one's just playing it for over the weekend. I would say if you're going to look at Texas Instruments for the earnings, keep an eye open for anything that comes in on stacks from Monday and Tuesday. Especially if they are going to be playing the earnings, you'll probably see an influx of calls or puts coming in on Tuesday, probably an hour or two before close. That's usually what you kind of want to keep an eye out for. If they're really aiming for the end of next week or the end of or the very beginning of August, those are the expiration dates you want to keep an eye out for. And if they're willing to spend, hundreds of thousands of dollars, if not millions of dollars, that's kind of your indicator that somebody knows something about what they're about to report. But I agree with you. I do think they're probably going to report positive earnings, positive revenue, and EPS. The question is, it's hard to tell if that's priced into this because they are near those all-time highs that they just most recently reached too.
Yeah, and I think the interesting thing though about it is like I have like a chart where it shows like 2 day prior demand. It shows like their 4 day prior supply, five. I think I can get up to 15 days worth of that data. And when I look at their 2 day prior demand, it's at 211. But even at that point, we saw a nice recovery. And mind you, this was on Wednesday. Wednesday, we saw a nice recovery. It was at 211. And we closed at 217, I want to say, in after hours. But 216.62 is what it closed on Friday. So it obviously has some momentum and some buyers that are willing to step in at those levels. And when you look at the 5 minute chart, if you look at where all of these aggressive run-ups are, it kind of closed those gaps and accumulated and started a next leg up. So from what I'm seeing is like in the last month, this thing, after it had its gnarly pop back in, yeah, from 192 back in on June 9th to June 10th, that this thing has been steadily accumulating at those 192 to 196 levels, and it's kind of just taken off and has been creating higher lows consistently over the last month. So it's definitely something that like I think does have a pop in it, and even if we see a drawback, it's shown that it will recover pretty quickly from any aggressive drawdowns that it has had, just from those buyers stepping in the volume alone.
Very good. I agree. Yeah, it looks strong. Reaction to earnings. This is maybe unless we see additional confluence on stacks, this might be the one where you wait till after earnings to figure out what direction you want to go in on it. But it does look fairly strong for the upcoming months, unless we have some other more macroeconomic issues that come up. All right. Next. This one was the last one I did for my write-up so far. I'll get the rest of them in as well, but we got EQT, which is another one of my picks for earnings. Tuesday after close, this one's showing a bit of a Wyckoff reaccumulation type of chart. EQT is a energy, minerals, and integrated oil company. Did just get a adjustment on its price target by TD Cowen up to 68 from 60, so it's right under 60 at this point. The thing on stacks, as you can see, there's a couple of these puts that were sold at 51 and 45. Like Max said, these can be considered walls that are considered support at this point. On the other side of it too, though, if you just filter for the buys, just last week we do have these 8.15 and 8.1 $60 and $61 strikes. So these are definitely a little bit shorter term. Like we said, for ENPH and phase, those ones are more of a longer term play for January of 2026. They've got multiple months on this one, on that one. On this one for EQT, this is very short term. This is within the next 2 weeks, 3 weeks, if anything. Okay. The thing that you have to understand is, yeah, the first two, 92K, 97K, not exactly the biggest amount of premium, but this one, 309K for 3,000 contracts at 1.03. That one kind of intrigues me. And the thing that I want to point out here is the chart. I'll make sure you guys can see all of that. Cool. This is a Wyckoff reaccumulation chart. It is when price continues to go up after it's accumulated near the bottom. And you can see that there is quite a few similarities in terms of the chart and in terms of where certain resistance and supports are being found. You've got a preliminary supply down low, little small one with a buying climax, and a shakeout, or you can also consider the odd end where they rebuy and they buy up more of the shares up to an automatic reaction. From there you see a secondary test area, and after that you'll see a lot of chop below what we call the creek, and from there a bounce back up and a jump across the creek before we see a last point of supply and eventually some more signs of strength. So here it's very possible we had a small sign of strength here. I don't think it's the biggest one, but there is a possibility if we break up above these highs that we've most recently seen, we could see another sign of strength, another last point of supply before it blasts off even further. So the thing is, I do think with what Stacks is showing, and obviously we got to wait till Monday, see if there's continued purchasing, if there's additional buying of it. But no, like Max has said too, this guy didn't get in with $309,000 expecting to lose that premium within 2 weeks. So yeah. EQT, there's a more of a bullish sentiment for earnings. I love it when it goes and aligns up with what I have to show you guys in terms of a Wyckoff chart. Keep in mind though, Wyckoff doesn't have to play out exactly that way. Wyckoff tends to be a long-term play and a long-term big picture situation, but it's also when we see Stacks showing us that that confluence, the confirmation through other people and the big money putting their money where their mouth is. Those are the situations that give you a higher probability on those types of earnings plays. Did you do EQT earlier? Yeah, here we go.
Yep. So for EPS, we're expecting between 45 and 46 cents, which is up 675% year over year. That's pretty crazy. Revenue, we're expecting 1.18 billion, which is up 53% year over year. The EPS trend, it's been revised up 0.13% in the last 30 days. But earnings ESP, here's our warning sign, down 3.27%, another bearish signal. Zacks rank gave it a number 3, which is a hold. It's had big beats in the last 4 quarters, but no edge in the models this time. The setup, explosive potential, but high risk. So what's driving the quarter? Natural gas prices are back, baby. Henry Hub average prices in Q2 are up massively year over year. In April, we saw 342 versus 160. May, 312 versus 212. In June, 302 versus 254. That's fuel for EQT, especially with less than 50% of output hedged. Big upside, or a big whiplash. I think there's more upside though because they had the Olympus acquisition. That's a volume bump. But yes, volumes went up, but integration and transition costs are still chewing into those margins. So that's one thing we need to be aware of. We also have the Appalachian pipeline bottlenecks, which is giving them limited leverage. Even with better gas prices, EQT's stuck with regional constraints. It can't fully sell into higher price downstream markets yet. Now let's talk about our bull and bear case for these guys. The bull case, gas prices are up 90% year over year. Revenues expected up 53%, four straight EPS beats, production expanding via Olympus, and a low hedge equals high torque to price upside. Now, the bear case with them is EPS estimated was revised down recently. ESP is negative, which equals no beat signal sometimes. Pipeline constraints limit the upside here, and integration costs will likely pressure margins. The spot price volatility finally can bite down or bite onto the downside. And our final word is EQT is the largest U.S. natural gas producer, and the wind is finally at their back. But this isn't a clean setup. Pipeline limitations, low hedge coverage, and acquisition noise all add risk here. High expectations plus high exposure equals a wide earnings range of things that could happen with them. So watch the tone of the call after the forward price commentary and margins that they report like a hawk. Now, our poll for them, are they long and gassy? Are you going to hedge your bets? Do we have a short squeeze incoming? Because that is a lot of times. This is also a setup for a short squeeze to happen, and we see some crazy runs post earnings dip. Like, because if it sells off, there could be a squeeze in place since there aren't a ton of shorts open on it right now that make the price just explode at a certain level. Don't know what that level would be. And finally, for all of those who want to sit on your cash, no thanks, you'll be sitting this one out.
Yeah. I like the chart. That's how I'm looking at it. I like the way the chart looks. There is a risk to the downside. If I show you guys here, the chart up here, where this LPS is, last point of supply, it can chop around here for quite some time. So there's a possibility we could see this drop back toward, I would probably say toward this like $55, $53 range. That could be very possible if we see a negative earnings report. We don't see them meeting the expectations as much. But you also have to consider it is at these all-time highs for the chart. And a lot of times when you do get to those higher ends, you might end up seeing it squeeze upwards as well. The Wyckoff chart, and also I would even say is if you look over at what Stacks had to say, that open or that the short-term calls that we're seeing in terms of this company, I would say give it a higher potential for an upside play for earnings than downside. Now, again, if on Monday we end up seeing a bunch of puts being taken, we see those calls sold off right before earnings, then that would definitely change my expectation for it. But as of right now, looking at the chart, hearing what Max had to say in terms of how great this company is doing, I could definitely see it run up in terms of their earnings on Tuesday.
Also, on a technical level, they've been able to reclaim and stay above their slowest EMA at 56.02. So that's always a good sign because even if it loses it, it's all on the 4-hour chart that I'm looking at. Anytime it's lost that level, it's quickly gained it back. So even if, again, we see a sell-off with them, it's going to be temporary. Now, granted, temporary is like, it could be like a week. But again, if you buy time, and that sometime is the best play. If you're uncertain, you can buy just more time on your contracts and buy a further out strike to wait for that recovery potentially. Because if anything, that's just an opportunity for you to average down. So I like this chart though. I think I might play some calls this week to see what happens.
Yeah, I'll be looking into that on Monday when market opens. We'll keep an eye out for that one. All right. Man, I love it. There's still 5 people watching. If you're still in here, comment stacks, or if you want, go ahead, comment EQT so it knows, so I know you heard that about EQT or ENPH. Those are the 2 plays we're really looking at this point. Max might get into Texas Instruments. We'll see about that, but we'll continue on with what we have here. Let's see, earnings for the rest of the week. Oh, we got some big ones coming up. Okay, so we've basically done everything through Tuesday. Wednesday.
I feel like we should hold off on going into the deep dives for this stuff until
maybe do a
Tuesday.
Yeah, maybe do
Tuesday.
a Tuesday closing bell for you guys.
We'll do Tuesday closing bell, but it'll be an earnings edition, and then Wednesday we'll just have our normal like midweek pulse check, and then go over any kind of like outliers or put some polls up so you guys can vote on what, if there's any earnings you want us to hold off to potentially find some swings that we could get into for, because I'm looking at Thursday, Intel, American Airlines. I saw a lot of AAL come in last week.
Well, the
Honeywell.
Wednesday big one's going to be Tesla and Google.
Yeah, that's why I'm thinking
we also have Chipotle coming in too, so, well, yeah, definitely.
And by the way, IBM, I think is going to be, IBM's my sleeper pick this week, by the way, because they released their quantum computer, and luckily quantum computing isn't where AI is at. People just want to hear the word. They don't give a shit if it actually does anything. Yeah, so like, if you're just like, we released one, people are like, oh my God, like time to ape into this. And I think IBM's gonna crush some. I hope it hits my $300 price target. I have a $300 price target. I put a $300 price target for my end of year price in IBM in January. But I didn't know they were going to release quantum computing. I did that because I was like, they might announce plans for a quantum computer in December or something, not release one in July.
All right, yeah, we'll hold off on those. Definitely, if you guys enjoyed what we went over today, liked any of those plays, go ahead and comment for us. If you're watching this after the fact, if you're watching this after these earnings have shown up, let us know if we were right or wrong. Obviously, it's always about probabilities. It's always a little bit about, if you happen to have inside information on things. But with what we've been able to do here, we've got some insights through stacks. We've always got Max doing all the rest of the data, letting us know what expectations and the earnings review is. And obviously, I'm always going to give you guys what I see on the charts to help us out there. But yeah, that was an awesome one for a Saturday, dude.
Oh yeah, hell yeah! Like, this is we can definitely do these during earnings season, especially because there's always I can always get Monday, Tuesday, Wednesdays when things get a little hairy, when we're this far out in terms of like breaking news stories that I can report on. But I always feel like with the explosive earnings contracts we see, we get like a 2 to 3 day window of buying, that an accumulation of people building positions, averaging down, whatever the case might be. Again, it's my biggest 2 cents for you guys playing earnings contracts. Please look at timestamps. Look at timestamps of when orders are coming in. It's great that you go look at a contract, but don't filter it by premium. Just look at what the timestamps are, because that a lot of times will tell you the story. If you see someone given a normal order of like 50K at a strike, and then all of a sudden you see a big block order and a big money order with a golden sweep attached to it for 1.7 million, like an hour later, yeah, that person is definitely went from I know something to yeah, I definitely know something. And those are the signals that I look for. If you join the streams, I just basically stare at options flow and give levels for SPY all day. But like, that's how I read this stuff. To give you a little insight, is just read the timestamps, especially during earnings. because that will definitely paint you a very clear picture of like what's really going on with the chart, and where people are expecting price to go, or if there's going to be a news story that's going to blow the doors off of this thing as well. But yeah, I think this is going to be a great week to make some serious money, if we play this correctly and we definitely read flow and all that kind of good stuff.
Yeah. And just so you guys see over here, we've got the calendar for this upcoming month. Next week is this upcoming week. Obviously, Tesla, Alphabet, Google. You even got ServiceNow, Chipotle, GE, IBM, Alaska Airlines. We got Intel, Southwest American Airlines. We do have, and then the next week as well, we got Waste Management. We've got UPS, Visa, SoFi, Boeing, PayPal, Spotify, Merck, Meta, ARM, Microsoft, Robinhood, Altria, Carvana, Lam Research, Ford. Oh my God, next week is nuts. Apple, CVS, Reddit, Coinbase, Chevron. So a lot of big names coming up, and then the week after too, AMD, Snapchat, Pfizer, Lucid, AppLovin, Disney, Duolingo, Uber, Oxy, Eli Lilly, ConocoPhillips, Atlassian, T2, Wendy's. Like, I mean, I'm sure I'm missing big names too, but those are the ones that stick out to me. And the week after, the big one I would say would be Cisco. But keep an eye out. We're going to continue to do these reviews for you guys. Give us a like if you enjoyed it. Give us, hit that subscribe button, hit the notification bell so you at least know when we're going to be posting these and when we're going to be doing our live streams. I always try to post it in our Discord. If you are in Stacks or the Discord, just make sure you follow my channel. You can also enable notifications for those if you'd like to. We do have a few people that commented today. Morris talked about how he wants... Let's take a look at hymns really quickly. Hymns, in terms of what Stacks has to show us, we do see some big money puts that were taken out earlier this week as it hit that $50 range. So I do think that there might be somewhat of a pullback from those levels. The thing that's been really moving it for hymns right now is you've had the Ozempic company that pulled away their contract. But I'm sure that Hims is going to continue to do what they can to secure their future when it comes down to it. Now, a couple of things, though. If you pull up the insider trades here, we got the CEO selling, okay, 2.3 mil, 140K, 122K. The CFO bought, but that's only 38,000. CFO sold 500K. This is all within the last week. So... that's not exactly the best signal when it comes down to it. That probably gives me a little bit more confidence that these puts might end up paying out a little bit. 6 mil and 3 mil when it comes down to those puts taken out earlier in the week. The other thing, though, is we do have these calls that were taken out for 2026. So March of 2026, strike of $90. They got in. This is up just a little bit at this point. This actually happens to be a Stacks AI play. So down the line, do I see the possibility of this Hims play being profitable? Yeah, down the line. But as of right now, I would probably say there's likely a little bit of a pullback coming up for it. And if we take a look at our trading view at our so far it's kind of dropped. This could be considered to be a little bit of a bear flag pattern showing up. We could see it come back toward that 45 range, lower end probably the $40 range, but I would expect that it very likely would get snatched up at those prices. This could also be a part of it too. Hims and Hers Health Incorporation class action notice, so that's probably what's pushing those puts pushing people to get into those puts. Alleged deceptive marketing of Wegovy, which is the Ozempic, trigger securities class actions. So that's very likely why we're seeing maybe a little bit of a sell-off before it gets snatched up. All right. If you guys are still here with us, let me know. Is there anything else you want us to look at before we end off today's stream? We will likely, we're probably going to do a Tuesday stream to get us to review what we talked about today. I'll have these also clipped up. I'm going to do little shorts and shorter videos for each of the reports that we just did so that you guys get that before market open on Monday. And then Tuesday, same idea. We'll do the reviews, do our earnings predictions, get us what we've seen on stacks, look over our charts, get our write-ups done for that so that when these things do show up for earnings throughout the week, you guys will have the information to be prepared for it. But as always, you guys be careful, manage your risk, don't all in on anything. It is earnings season. Oftentimes earnings is going to be more of a gamble than you know. So be aware that just because we say we see the tape going up or going down, you have to remember, even with an earnings beat, you can see price drop. Even with an earnings miss, you could see it shoot up. That's never a guarantee. But at least with stacks, at least with the data and the information we have, we can kind of swing those probabilities in our favor to help you guys out. And we're hoping you guys make lots and lots of money these upcoming weeks with all the earnings and all the extra work we're going to put in for you guys here. Got anything else, Max?
No, that's it. I'll be doing earnings previews all week as well, and streaming daily. So if you want to come in and talk about earnings stuff, I have those daily streams that happen. And just make sure you pay attention to Substack and the Trades and Gains channel, because I'll be posting like earnings previews and flow and all that kind of stuff related to it this upcoming week, and for really any earnings season that we have moving forward.
Yeah, all that stuff is down in our description box below. I mean, if you haven't yet, go ahead, hit that YouTube channel for Max's YouTube, as well as his Substack. If you give him your email on the Substack, you'll get a lot of the earnings previews, all the things that, he's at his computer putting in the work for you guys. It's up to you whether or not you want that info, but there's a lot of valuable information there for you guys to absorb. Our Stacks Beehive will also be sharing a lot of these earnings previews. We'll send that out very soon as well. And of course, you've got all of our social media content down below. If you're not already following us, I definitely urge you guys to do so. Go and follow us on Instagram, on Twitter, on X. That way you guys get the additional information. You can interact with us over there too. Okay? That was a good one. We will see you guys very likely on Tuesday if you're not already in our Discord. Otherwise, we'll continue the conversation in our Discord and on our Stacks platform. But again, very happy to do this for you guys. Hope you guys enjoyed our closing bell, even though there was no closing bell today. That's just the name of our stream. We will see you guys on Tuesday for the next one.